Come back, ladies and gentlemen. No, I am not hungover. You'll never get that with me, and that will never, ever happen. I mean, yeah, I'm a cheap date. Like, I drink, I'll smell alcohol, and it will just go straight to my head, and I'm flat plastered on the floor. No, none of that. Ladies and gentlemen, firstly, thank you so much for all your birthday wishes. It was a lovely day yesterday. I am now 39 years young. Happy days. But we're back to the markets now. US has now returned from its good old Labor Day holiday. And today's topic is going to be an interesting one. Prepare for the dollar crash. That's what we're going to be diving into. So if you want to know about that, make sure you stick around for that. But we're going to be diving into reasonings as to why this could actually happen. We're going to be focusing on the importance of the Japan. Let me start again. We're going to be focusing on the importance of why the Bank of Japan has now decided to pull out a little card suggesting that they may actually increase their interest rates again. Well, what does that mean? Well, the last time they increased their interest rates, which was done on the 31st of July, the first day back in the markets, you saw what happened. Everything went to the downside, to the toilet, taxi. That's what had happened. We get that again, ladies and gentlemen, that might be a little bit of a problem. So we're going to be diving into a few macros to help us understand if that is something that is going to be happening in the near future. Word on the street is January. With that being said, we're going to dive into what the story is with Bitcoin right now. A lot of people are humming and ahhing about the idea that Bitcoin is going to be tipped to start rolling lower. 40K is the word on the street, ladies and gentlemen. Do you believe it? Am I going to get the guys who are, no, it will never happen. We'll never go down to 40K. It will never go. It will never go. It will never go. It will never go when you said it would never go above $100 and it went above $100. So we can't have the same logic when it's expecting it to go to the downside. It could never go down there. It could go down there, you know? An EMP could wipe Bitcoin clean. Hopefully we don't get to the EMP story. But as we return back to the marketplace, we do have a week full of news. And this is really important for us because the theme that we're going into today is the manufacturing data. Now, there's two types of data that are going to be released at 3 p.m., which will be in the next 50 minutes or so, which is 10 a.m. Eastern Standard. You've got the manufacturing PMI for the manufacturing productions and all what's going on in the manufacturing sector. And then you've got the manufacturing prices that will be coming out. Now, the difference between the two is one of them represents an inflation reading, which is what the Fed is focusing on. Now, the ideal scenario for us right now, which is what we're preparing ourselves for, is how much of a rate cut is the Fed going to give for the US economy? And all the data that's coming out from today going into throughout this whole week, because we've got non-farm payrolls, ladies and gentlemen, and that's where it gets a bit volatile. The data is going to lead us into understanding if the Fed is going to be aggressive with its rate cuts or not. And quite frankly, if we don't get the interest rate cuts that we should get, the only reason why the stock market will continue to move higher will be the election. Now, regardless of whoever wins, the word on the street is that the stock market is still going to go up. We are in what they call the last wave of movement to the upside. So we've got to get ourselves ready, ladies and gentlemen. So if you are new to the channel, stick around with this one because there's lots of information to get through. Let's have a conversation, gang. Here we go. So stocks fall before manufacturing data. The yen rallies. And this was all during the Asian session last night. Now, the reason why the yen had rallied is because this dude right here, Ueda, submits document to the government panel showing unchanged stance. Yen firms against the dollar following the release of the comment. What's he talking about? Well, they're talking about looking at lifting the rates if the outlook is realized. Now, when you look at this, to the trader or the investor, when he sees that the Japanese want to increase their interest rates, that's going to be a problem for an investor in US stock. Why? Because the reason why the stock market has been going up is because investors borrow Japanese yen and then convert that into US dollar and use the dollars to go and buy stocks. Bitcoin, assets against the yen. Now, the principle says that when the yen goes down, the dollar goes up, okay? So on top of the dollar going up, you've got the bonds going up, you've got the stock market going up, happy days. When the yen goes up, the dollar goes down. But then if you start seeing the stock market going down, that means that there is a lot of guys that have got money borrowed, which is yen, and they're then trying to convert the dollars that they used to get that yen, sell those dollars and put it back into yen because the yen is increasing their interest rates. And you might understand this to be the carry trade principle. Now, I did a video on this in the channel, which is called Why Bitcoin Dropped. Go and search that video and it does a deep dive into why the Japanese had effectively increased their interest rates, which caused the markets to drop. All right. So this story here, what do they mean by the outlook realized? Let me show you something. In front of you is the Economy Watcher Survey Index for Japan. All right. Now, this factors in employment, household activity, corporate activity, and it gives the current conditions of where they are right now. Okay. You can see it's been pretty volatile as of late from 2020. Okay. But what's going on right now is if we just zoom in very closely, you can see that there is now some activity happening in these environments. So it looks like things are sort of on the up for the Japanese, okay? Now, for them to control the amount of yen that is used, they need to effectively be on the lookout to make sure that they don't allow it to get inflated too much. And the only way that they can do that is by increasing the interest rates. Well, what would the result be if they were to increase the interest rates again? Well, if we just go into it all, you can see the dollar dominance is now taking a bit of a nosedive to the downside, okay? You go over to the yen itself, and that is naturally going up quite aggressively, all right? So then we could make the assumption, all right, that investors have now come back to the marketplace and they've heard about the news, what Odeya has said, and they're now going into yen because they're selling their dollars to put it back into yen so that the yen can appreciate because it's costing them more money to hold on to those existing positions in dollar. That means stocks, in principle, should be going down, which is what you're seeing happening in the stock market, okay? That logically then says that Bitcoin might actually look like it's trying to come down, but do not compare Bitcoin on an intraday basis to what we're looking at in something like this. They're talking about they are maybe increasing the interest rates in January, which is very fitting given that we've got the rate cut coming and we have got the elections also coming into play, all right? So as long as the economic conditions for Japan seem to be showing promise, the likeliness of them increasing the interest rate again is something that's going to happen if they meet their realized outlook on the economy. That only means that we may be going into another Japanese yen carry trade principle, which this author right here, T-Row manager, who predicted the yen shock, sees another one coming. Hold on a sec. So this guy has gone on to say that the scapegoating of the yen carry trade ignores bigger, deeper trend. The Bank of Japan hikes an impact on global capital far from simple. He goes on to say that effectively the hawkish stance of the Bank of Japan is probably going to give us another scenario where the markets drop down. So what are we talking about? This drop right here. And that's Bitcoin. If you go over and look at the NASDAQ and the S&P, you can see what happened there. Reset the view. This drop, which was pretty scary. That was the result of the carry trade principle. Now, this author is suggesting that it might be something that actually might be happening again. Now, we've got the rate cut for the US and we've got the election. The Bank of Japan are going to be waiting. They're going to wait and see what the Federal Reserve is going to do. And the fact that they want to increase that, and this is me speculating now, the fact that they want to increase their interest rates coming into the end of the year, January, where there's 3 more FOMC meetings left to be had, okay? So all the data that comes out this week is going to give us an insight into what they could be doing at the first meeting. The next week itself will give us insight as to whether or not that they're going to justify another rate cut in the following meeting, because that's the CPI week. And then the final meeting will be effectively when we go into the next meeting, which is in September. Whatever data is coming out before that is going to give us enough scope to understand whether or not the Fed is going to cut as aggressively as the market would like them to. So when you're looking at the charts right now and you're looking at the data, the ISM manufacturing PMI, which is due to come out, is suggesting that it's at 47.5, which is what the reading is that they are anticipating. If the news is bad for this, that means a reading below 47.5 would suggest that the US economy is starting to contract. It's already contracting when it's below 50. They're expecting 47.5, right? That comes in at 47.2. It's lower than what they had expected, but higher than what it was. But the market will look at that and say the economy is probably going to be contracting. That's great news for us. Why? Because it means the Fed needs to cut the interest rates. Then when you get the ISM manufacturing prices themselves, if those come in still higher, that's going to give us an idea that inflation might be poking its head again and it might actually be increased. That means that's a problem for us. Why? Because then that means the Federal Reserve will be more reluctant, to increase the rate cut. They don't want to cut the interest rates if inflation's still a problem. And the manufacturing prices themselves are kind of giving us the idea that that might be the case. So how does this all marry up to the story? Well, we know for a fact that Bank of Japan are brewing something. An author has come out and said, listen, by the way, they manage $1.7 trillion worth of capital. So we might want to pay attention to these guys. Okay. He's saying that we could be going on to another carry trade principle. Well, now let's just look at all the macros that are suggesting that. Check this out. The word on the street is that there may be one last leg of the move to the upside. Okay. Well, look at where the S&P is. Look at where the NASDAQ is. Look at where Bitcoin is. Bitcoin, NASDAQ, S&P are all towards their all-time highs, and they're trading ever so slightly away from it. S&P is more closer to its all-time high than the NASDAQ, but the NASDAQ is very volatile, okay? Look at this. There are a number of things that are starting to show their hand, which could be suggesting that the market is heading into an overly optimistic state, and things could be changing, which is going to naturally lead us to the story of why the dollar is likely to collapse, okay? You saw this yesterday. Semiconductor billings and Taiwan exports. We see that they are actually starting to top out. And when the Taiwanese exports start to slow down, that means AI companies overseas, like in the US, are not consuming from Taiwan, given that Taiwan is the biggest semiconductor sector in the world. That's where it all begins. Anything that NVIDIA wants, they're going to Taiwan and picking it all up. You've got something like this, corporate earnings revision. You can see that the chart is showing a little bit of a decline. So they're starting to see a slowdown on companies' revisions on their earnings per share. And if a company's earnings per share are being revised lower, then that means that company's service is not being consumed. That means people aren't spending the money. Businesses aren't getting contracts in play with the company to get the service that they're offering. And when you've got that happening over a number of stocks with big market caps on the stock market, that's usually going to give you an idea that investors may be pulling money away from the stock market at the fear of not earning enough money from holding company shares. And you can see that we're starting to get a little bit of a contraction coming into play. And over here on this chart, you can see it says US stock industry recession warning. You zoom in, you can see we're heading into an area where that could be the case. All right? This is how you know it's starting to get very interesting. The UK is tipped now to become the second largest holder of US debt. I thought it was Japan and China. Nah, the UK is going to start taking China off the top spot nearly. What does that mean? It means that things are getting bad for China. And as they are deemed as the second largest holder of US treasuries, what does that mean? That means that China might need to free up some liquidity. And that means selling off bonds. The US don't want that. Now, you're probably at this live stream right now thinking, okay, when are you going to get to the Bitcoin price action? Well, you're going to understand that by the time we get to the Bitcoin price action, that the question is going to be whether or not you think Bitcoin could go to 40K. I ain't saying Bitcoin's going to 40K. I'm trying to present you the picture of what's going on collectively to justify why one more rally to the upside across the board, which will factor in the stock market's highs, the election, and the interest rate cuts by the Fed, will then bring us into the start of the new year where we ain't going to have a Santa rally. We're going to have ourselves, well, let's talk about the Grinch. That's what it looks like. Going into another reading here. US industries with year-on-year earnings per growth above the 12-month average. This is suggestive that we're getting into an over-optimistic state with people very optimistic about earnings per share readings. Well, hold on a second. We just went over to this and it kind of showed us a different story, okay? That's not really what's going on. Slow down alert of corporate earnings growth. Well, that's starting to slow down, but we are going into over-optimistic environments. So that's consistent with the stock market topping out. We're topping out on the stock market, which is effectively giving us the idea that once the Fed pivot comes into play, the market will then contract, which then leads me over to this story right here, ladies and gentlemen. Strap in. Forbes have come round and said, serious 40K Bitcoin price crash warning issued as the Fed suddenly braces for a US dollar crisis that's predicted to spark total collapse. Now, most of you in cryptocurrency would naturally make the assumption that Bitcoin's price should go up. Are we in agreement that the dollar crashes, Bitcoin should go up? In my opinion, that's what we would think. But the problem that we have got is there's too much Wall Street money in crypto. All right? 300,000 Bitcoin is owned by BlackRock. You've got Grayscale, you've got Fidelity, you've got all of the guys that are picking it all up. Okay? That supply has been taken. That supply has been taken so much. All right? That's going to have an impact if they have to offload it all. They call Bitcoin the Ponzi scheme and what have you. But then you've got the people that will advocate for Bitcoin, hoorah, to the upside and whatnot. The idea of Bitcoin is fantastic, but that's the problem. We're going into a big transition in the marketplace, ladies and gentlemen. People in cryptocurrency think Bitcoin can absorb bear markets in the financial world itself, in the legacy markets. But the problem that we've got, ladies and gentlemen, is Bitcoin now has Wall Street money tied to it. So if Wall Street ain't liking the economy and they're seeing that things are getting bad and they have to start pulling liquidity out, well, look what happened to Bitcoin on the carry trade principle. The dollar slumped when they were selling those dollars to put them back into the yen. Why did Bitcoin not move up? There have been too many instances that Bitcoin should have shown its worth as the true currency, the true way forward. And it has not done it. And it's just stuck to the same old thing with the stock market. This is why people are now starting to think Bitcoin is just exactly like a stock in the stock market. That's the problem we've got. But if the dollar crashes itself, that would be the only time Bitcoin should step up. It has to. That's it. Dollar crashes. What's the alternative? Bitcoin. Now, when we look at it, it goes in to start saying that the Bitcoin price is trading around 60,000 per Bitcoin, up from January lows of 40,000, as traders bet a fresh injection of liquidity by the Federal Reserve will put Bitcoin and crypto market on the cusp of a major move. From the same company, today's new moon sets up a supermoon eclipse and a ring of fire. The only ring of fire I know about is on the Xbox, okay? And you know what I mean by that. But Forbes is now talking about moon cycles. Well, to be fair, JP Morgan started to educate everyone on the street about the astrology and moon cycles and what have you. Some of the greatest stock chartists out there back in the day, we're talking like nearly 100 years ago, they all based their projections on the cycles of the moon and the seasonality behavior of people during winter, summer, autumn. But this doesn't mean there's going to be a pump to the upside, nor does it mean it's going to be a drop to the downside. It means that volatility is going to be coming to the marketplace. And if we put two and two together, we go over and look at Bitcoin's price right now, and we say to ourselves, okay, what's the likeliness of Bitcoin continuing its move to the upside? Well, let's just look at it from the perspective of the daily time frame to understand where we are with Bitcoin. Right now, Bitcoin is currently forming basically, Bitcoin is in exactly the same spot as it was when we last did the live. And then last week, we were speaking about Bitcoin, and it's exactly in the same zone that it has been. And then prior to that, when I was away, Bitcoin is exactly in the same zone that we've been speaking about. So basically, Bitcoin doesn't move. Bitcoin has now proclaimed itself to be the biggest stable coin on Earth, next to XRP. Speaking of XRP, we go over to that. It's just a violation. It really is. But what I'm trying to suggest to you all, ladies and gentlemen, is the only way that the dollar will crash, okay, is if this story does really come into play. But the Japanese can't allow the strength of the dollar to go up, nor is they allowing the strength of their yen to go up too much as well. They are the largest holder of US bonds. So as much as we might be thinking that there's going to be a crash of the dollar, it will probably sweep lower to the 90 and then reverse back up. It will be a very quick thing. But there'll be chaos across the board. And logic would say that you'd be expecting investors to start putting their money into Bitcoin. But the problem with Bitcoin is you've got investors already from Wall Street holding Bitcoin. And if they get rid of that Bitcoin, well, everybody knows that when prices are crashing, no one's going to be buying it because they're seeing it's dropping and they're in fear of it. Only the smart people are going to be buying the Bitcoin at the discount of 40K, which leads me on to the idea of, do you think we could get a Bitcoin 40K? From the hybrid system perspective, Bitcoin needs to break beyond the 48 zone. But what would lead Bitcoin to go to 48? Well, let's just understand Bitcoin at 40K. Now, look, I'm going to say it now, all right? Before you start losing your brains. This guy wants 40K Bitcoin. Last week, he wanted 80K Bitcoin, but you're missing this point of the live stream when I'm saying to you, hear me out. No one ever puts that in the comments. They only just take what they want to hear and think, duh, he said 80K, now he said 40K. That means, hear me out. From a technical point of view, and someone did say, it's all technical, Tino. It's going to 15. Look at where we are. Interest rate increases, decreases. So it's interest rates. We've got a bagload of data coming out this week and the week after, and then we have the FOMC. All right? So there's many reasons as to why the market is going to react. And they're tricky dudes. They really are. Platinum members, they know that when we spoke about the Market Watch this weekend, so if I just go into the Market Watch, right, on this video, we were talking about the macros and everything that we need to take into consideration going into this trading week. And at the start of the video, I pulled up the calendar, okay? And if I show you this, what do you see up here? Look at the data. They are projecting a forecast on the JOLTS job openings to come in at 8 million, okay? 9 times out of 10, whatever figures are placed here, they're keeping the same figures, all right? JOLTS job openings, 8 million. I woke up this morning, came to my charts, and now it's 8.09. Why are you increasing it? Why do we need to increase it a bit more? Come on, analysts of the United States. Come on, tell me why you need to increase it. Oh, is it a mistake? How are you making a mistake? What more data could you be getting? What more information are you getting from the fact that now it's been revised to 8.09? What's the revision about? Is it because the reading that's going to come out is going to be less than 0.818? So could it come in at 8 million 1.2? So it will show a negative reading, but nonetheless a positive one in line with expectations. So that can really manipulate the market and make the participants think, okay, it's not as bad as as it's made out to be. Even though they expected it to come in lower, it actually came in lower in comparison to last reading, but it's still higher than what they're expecting it to be. The JOLTS job openings report itself has been scrutinized because they have make people believe that there are jobs available, but no companies are taking them on. They're just making it look like the company is busy and active and searching for people to encourage investors to hold on to the stock. Well, if you go over to this chart right here, this is what's been going on, ladies and gentlemen. As it stands, 422 tech companies have actually done, with layoffs, have laid off 136,782 people in 2024. Okay? We had a few layoffs at the start of the year. Recently, we just had another layoff from Cisco with 5,900 people being laid off. Cisco, man. That's a big company. The data is always going to be challenged. I will always think it's different, okay? But going back into the idea of the dollar crashing, the only way dollar, in my opinion, crashes and how they can prevent it is if they resolve this matter again. I will always laugh at this chart, guys. Always will laugh at this. Some of you might be like, why is that a funny chart, Tino? Because that shows you the unrealized losses that banks have in their portfolios. That reading right there is 512 billion. Okay. So in 2018, because I've referred to this, I did the video on it. 2018, when we had the stock market crash, what had happened? That balance was 225 billion. No, 275 billion. And the stock market crashed. Now, I'm not calling for a crash. I mean, everything will be on discount, ladies and gents. Tell me why you would want to pay more for anything. Let's be honest. Would you want to pay more for everything? You want to go and buy yourself a car? You're not going to go to the guy and say to him, excuse me, what's the price you're selling it at? I'm going for, it's $50,000, sir. No, not interested. I want to pay 65. What the hell? That's what you're doing when you're buying at these all-time highs. You're buying assets that are appreciating, but it's not making sense, ladies and gentlemen. It doesn't make sense. And you've got a rate cut coming into play, and we're at an all-time high. Fed pivot historically does it. But this image right here, if they don't do something about it, because when you closely look at it, it says available for sale securities, which is the beige, and then held to maturity securities is the blue. They're going to do their damned hardest to make sure they try and offset some of this. And they're going to try and sell as many of those securities as they can. The Fed pivot, or should I say the interest rate cuts, the election, it doesn't matter who wins. The stock market is going to get pumped about it. Okay? That would then lead the stock market to make the all-time high because it's very close towards it. All you've got to do is just go and have a look at the S&P right now. Look, it's not doing too bad. Not doing too bad. All right? But we have got so much coming to play in terms of the impression that it's going to leave on investors as to whether or not the Fed is going to give us the 25 basis points plus. They want 50. They want a whole point cut. That would then inject so much liquidity into the marketplace, which in principle wouldn't crash the dollar. It would help the dollar. But that's what happens with fiat. You just print even more. And then they'll be like, yeah, don't worry about it. And let's start the economic expansion yet again. This chart right here pretty much shows you that banks are in trouble. They really are. And whatever they do, if they're playing around with data, they're going to want to make sure that they get investors buying up. Because by the principle of smart money and dumb money, you can see over here that we need to see smart money selling into retail, and we need retail to be buying it because psychologically where we are right now, people buy when prices are rising. People buy when Bitcoin is pumping. People don't buy when Bitcoin is dropping. Well, the smart people buy when Bitcoin's dropping. Come on, man. Come on. There you go. Please hurry up. Why are you taking forever? Anyway, you've seen this chart before. This is a smart money, dumb money chart itself. Okay? Quickly going over into Bitcoin price action, you can see bright as day that we have had a little bit of interest on Bitcoin, okay? And it seems to be holding out in these lows. This is the proof they're buying. Look, 11 million bought at the 57,200 zone. We've got a collection of high margin liquidity up here. And if you are going to be trading Bitcoin throughout this week, please, please, please take into consideration what's going on in the week on the charts, all right? Don't get yourself caught out in too much volatility. All right? Don't use too much leverage. Do not use too much leverage. The whole point of the game is to stay in the game. Don't waste your time trying to go for the hero shot. Don't aim to be king for a day. There's no point. You're going to get smacked out. You really are. And if you're having to keep on depositing, you need to stop. You need to cut your size down and get your execution down to a T. Because upon your execution, you know that the money is going to be made, so you don't need to worry about the money. Don't need to be thinking about money if you get your execution down, Cristiano Ronaldo, Messi. They know that when they tee up for a free kick, they know what they're going to pull off from that free kick. But they've practiced it too many times. Bruce Lee said it. I fear the man who's practiced one kick 10,000 times. Keep practicing, because the result of it is you get better and better. It's all aspects of life. Keep your risk down to a minimum. You ain't going to be experiencing those wild drawdowns. That's the way the game works, ladies and gentlemen. Okay? Any questions, gang? Any questions? Here we go. So, market's open. Come on. What are you expecting? Now, Bitcoin ain't going to do nothing until after 3 o'clock. It won't do nothing until after 3 o'clock. Tino, what about the Ethereum after the ETH ETF has not since any pump? Yeah, look, 305 there. Where was it? Here we go. There we are. 305 million in outflows raise an alarm. That does not raise an alarm for me. People read that and think, oh my God, they're losing. The crypto ETFs are terrible. Well, no, it's not that. But there are so many bigger, and this is the problem that I've got with people in crypto. Not a problem with people in crypto, but the problem that I think people have in cryptocurrency is they focus primarily on cryptocurrency. You can't come to this asset class and dismiss what's going on with the bigger assets. You can't. You need to get into the frame of mind and focus on what's going on with the bonds, what's going on with the yields. If you're not paying attention to the yields market, then why are you going to be going buying? Right now, the yields are going down. That means they're going into the US bonds. They're getting a little bit scared. We've got an imbalance here, which might be a bit of a problem for us, because that could mean that if the bonds shoot up, that means the stock market might go down because they are inversely correlated. But sometimes you see the bonds going up and the stock market going up. And the only time there's a reason for that to happen is if there's speculation that the Federal Reserve is going to cut the interest rates. When they get excited, oh my God, they're going to cut. Oh my days. Wonderful. Get your money in. So the market prices that in. That's why you've seen this rally to the upside right here in the bonds market. Okay. That's why you saw that rally on the S&P and the NASDAQ happening. They're getting prepared for it. Now that they've priced it in, the next thing to price in is the idea of the interest rate cut itself. What's going to compromise the idea of high interest rate cuts or low cuts on the interest rates? And that's when you've got all this data coming out this week. So it's very important that we pay attention to that. Okay. Back into Bitcoin for a second. Any questions? Tina, what about the egg and chicken price? Because chickens are getting expensive, like $74 in the United States for a bucket of chicken and $299 for a dozen eggs, $2.99 for a dozen. Can you explain? I don't know if you're really asking me about the chicken and the egg story, my friend, but yeah, I have the problem of that. Yeah, London Calling, what we do when we do the projections, we get, after every live, I do a projection on the S&P and the NASDAQ. Just to give guys an insight into what I expect them to do. But throughout the day and the week, we do Euro, gold, oil, Bitcoin, Solana, Ethereum, and I'm going to be doing more NASDAQ and S&P because we're getting to a very interesting point on the NASDAQ and the S&P. But that's in the Platinum membership if you want to go check that out. But if you do check it out, go watch the Market Watch. I suggest you go and watch that, all right? Because it gives you everything about what I'm expecting from a macro perspective throughout the whole of this week. And that's what I do once a week, every Sunday. Okay. Now, anything else? Remember, we have FTX paying out billions of dollars. That is true. In your full course, do you teach how to day trade, also trading strategies? In the courses themselves, well, listen, before anybody takes on any courses, all right, just go to the Traders Reality website and take advantage of the free course. All right. That's all you need to do. Let me bring that up for you. Take advantage of the free course because everything you need is on there, because you're going to be left in the dark if you don't know what we're talking about in terms of the hybrid system. Let me pull that up for you right now. Okay. So for anybody new looking at this system itself, okay, go to this bit here, courses, and take the free course before you start committing any money. Okay, take the free course so it teaches you the hybrid system. When you've understood that, okay, and it tells you what all your tools are with the videos and the PDFs, then you want to take another course, go and take the scalping course, okay, only for scalpers. If you want to be putting the hybrid system to the test, go and do the Platinum memberships because the Platinum membership effectively gives you an ongoing breakdown of assets across the board and what we expect from the marketplace. Okay. I give you guys heads up on this sort of stuff here. Okay. But what I do is I correlate price action in the platinum setups in relation to this information to help you build the picture of what we can expect assets to do across the board. We do other things in there. There's way more than that. You get checklists. This is checklist part 1. I've completed checklist part 2 for the setups, where it talks about specific areas in the chart that we anticipate. Like the next one we're going to do right now. Sorry, the setups that I've got to give out right now are based on the vectors within the Brinks. Okay. And that's going to be for Bitcoin, Ethereum, Solana, NASDAQ, S&P. And the checklist itself is designed to get you to just have something so you can focus on it and refer to it. Because once I get the setup out, the idea is you're just waiting for the setup to come into play. Well, what happens if the setup is not being presented the way it's expected? How are you going to react to that? That's where the checklist comes into play. Okay. Moving forward, ladies and gentlemen, looking at Bitcoin on the daily, it is starting to make a little bit of a move to the downside, which is naturally what you can expect for the start of New York. It did start 50 minutes ago, but we do have news announcements coming out very, very shortly. So just be mindful. With what we spoke about today, we do have this story of the new moon and what have you, expect volatility. We know that the Bank of Japan want to start increasing interest rates, but that's nothing not to worry about until January. The only thing that we need to be paying attention to is Bitcoin's price action around the data that is coming out. Anything you hear about cryptocurrency in terms of outflows and inflows and whatnot, in my opinion, is irrelevant, because you want to be paying attention to what's going on in the macros of the bigger picture of things. Okay? When the UK is picking up more bonds than China, that tells you China's economy ain't doing too good. They're going to want to release some of that liquidity, which puts pressure on the US bond. They don't want to be getting rid of their bonds, man. They really don't want to be doing that. Because if they do, then that's a problem. Remember, China is the world's factory. When that slows down, principle says everything else slows down. If you've enjoyed today's live stream, ladies and gentlemen, mad love and respect. And I'll be checking in with you all